Hello and welcome to your Washington, D.C. metro area real estate market report for November of 2025. I'm Edward Slavis with the Slavis Group of LPT Realty, and let us begin as always with interest rates. Our source here is Bankrate, and as you can see, the 30-year fixed rate is now 6.28. That is down from a high of 7, where it was in January of this year, so it's the lowest point it's been in quite a while. It's more or less stalled. We do expect further rate cuts to come in 2026, and most analysts are predicting it does hit 6 sometime next year. This, however, standard caveat, is the national average. Our best clients are seeing less than this, closer to 6%, with maybe 6 and an eighth or 6 and a quarter being a little bit on the higher end. If you are curious as to what you qualify for, of course, let us know, and we're happy to introduce you to one of our preferred lenders. Let's look at now new listings in the Washington, D.C. metro area. This is not just D.C., this is the entire metro area. And this is the last 5 years broken down by month. And as you can see on the left side, in 2021, we had a peak of about 10,000, a little over 10,000 new listings in the metro area during the peak months. The following year, after rates started increasing in March of 22, that dropped, with a peak of around 8,500. 2023, the peak was at 5,000. The peaks are actually a little bit higher in 24 and in 25, maybe around 6,500, give or take. So the number of new listings is down overall by about 40%. Now, what is the impact on prices? Remember, this is just homes that listed, not homes that successfully sold, and we'll get back to that. But what's the impact on price? If we look at the median sale in the DC metro area, again for all home types, so detached homes, row homes, condos, co-ops, everything, you can see it just slowly ticks upwards, and it looks like a staircase here. You're just slowly climbing upwards. So the median sale is actually getting more expensive, even though we've had high interest rates now for going on 4 years. This is the year-over-year change, so you can see every single year, every single month, it is higher than the previous year, with the exception of 3 months in late 2022 and early 23. Overall, it just keeps climbing month after month. If you break it down between red detached homes, blue all home types, and yellow condos, all three share that same shape of just slowly moving upwards. Condos from about 350 climbing to 400, detached homes from 600 climbing to about 800. All of them are just slowly climbing up. Price per square foot looks similar. All three are higher on the right than on the left. They've all been steadily climbing. It might be flat the last year or two, but they're still higher now than they've ever been in the past. Months of supply is a measurement we've talked about before, where it's a measurement of supply and demand, how fast buyers are buying through the inventory. If you have 10 homes on the market and 5 sell per month, you have 2 months of supply. The lower that number, the stronger the seller's market. The higher the number, the higher the buyer's market. Overall, you can see that we started off with 1 month of supply for detached homes and all home types. That is a red hot seller's market. It's now climbed to 2.5 months of supply for detached homes and all home types. That is still a seller's market approaching a balanced market. Condos, the yellow line, started off 2 months of supply, dropped down to 1, and then slowly been climbing up. So now we're just over 3. 3 is a balanced market. Below 1 is a red hot seller's market. Below 2 is a seller's market. Between 2 and 3, you start to shift to a balanced market. Above 3, I would call a balanced market. So we still see low months of supply. It is still, by this metric, a seller's market. And why is that? Well, for the two kind of things we need to clarify. One, it varies neighborhood to neighborhood. So if I zoom in on American University Park in Northwest DC, you can see the months of supply for all the home types bounces between 1, last month it hit 2. So for the last 5 years, even after almost 4 years of high interest rates, we still have a very strong seller's market. Most of the data points here are below 1 month of supply, which is a red hot seller's market. If you look at Trinidad in Northeast DC, it's the exact opposite. It started off about 2.5 months of supply, which is a seller's, maybe a balanced market. March of 22 hits, rates climb, and the months of supply just starts climbing. In early 2024, it shoots up and it's above 10 and it's staying there. It's not moving anywhere. When you have 12 months of supply, this is a weak, I guess a strong buyer's market, but a very weak market. So if no new homes were listed in Trinidad in 2026, the entire year, not one new home is listed, it would still take the entire year for everything to sell that is currently on the market. So the micro market matters. When we look at the overall metro numbers, they are encouraging, but what we really care about are the numbers in your specific micro market, because that matters far more. There are some markets that are red hot as ever, like AU Park. There are others like Trinidad where it is very, very, very difficult to sell. This is a market where as a buyer, you're still prepared to go in and be very aggressive and take some more risk on the purchase. This is a market where as a buyer, you go in, you have all the leverage in the world, and if they're going to sell, it's probably going to be at a very, very favorable price to you. So the micro market matters. But I want to go back to the other reason now on why we haven't seen prices increase. This is the slide I showed before with the new listings in the metro area. Down about 40% from 10,000 peak to now about 6,000 peak. And the total volume is also about 40% less. Just trust me on the math. Trust me on the math. These are the homes that were listed. These are the homes that actually closed. So 2021, you had peak of 10,000 listed, peak of 10,000 closing. 8,500 listed, now down to about 7,000. And so it goes. I'll toggle back and forth between these, and you can see they're dropping. Now, on the listings, remember in 2023, that was the low point, slightly more in 24, slightly more in 25. However, when you look at the homes that actually sold, there were more in 23, fewer in 24, and fewer in 25. So the market is actually slowing down on the number of homes that are selling, even though the number of homes that are listed is increasing. The median sale is increasing. And one reason to explain that is saying the median is changing. In 2021, when rates were at record lows, all homes from condition 1 through 10 were selling. And maybe the median was a condition 5. Now, a lot of the homes that are in conditions 1 through 3 are not selling, only the 4 through 10 are selling. And maybe now the median is a 7 on condition. And so the median sale now, yes, it's getting the same price. Yes, particularly, maybe a better price than you were before, but the median is also a nicer product. And that's very, very important when we talk about how we want to go and price and market homes for sale. Or if you're a buyer evaluating the market for a particular home. So the micro market matters more than the actual market. We talk about the general market. What we really care about is your market where you are looking to buy or sell. And so we must identify that by neighborhood and type. Because even within a neighborhood, you might have a very hot home market and a slow condo market. So the neighborhood and type is very important. Rates are coming down, 6.3. Our best clients are seeing right at 6. We expect that number to come down as we move into the spring market. Rates are coming down. That'll make buying more affordable, and the market needs that. The market overall is slower. There's still plenty of activity, but compared to where we were 5 years ago, the activity is slow and perhaps getting slower. It is a buyer's market. Overall, in this market, I would rather be a buyer than a seller. If you are a seller, that is true, again, unless your home is properly prepared, priced, and marketed. And then again, it's that micro market. If you have an amazing home in a slow market, it will still sell. But you cannot take your sale for granted. How we prepare, price, and market the home is of the utmost importance. If you do that properly, you will still get the price that you want. If you have any questions about any of this, please, by all means, reach out. Happy to give you a free consultation, again, focused on your market of where you are looking to buy or to sell. That is your real estate review for November 2025 for the DC metro area. Hope you found that informative. If you or someone you know is looking to buy or sell in Washington, DC or in the metro area, we would love to be a reference and a resource for you. Please, by all means, just reach out and we would love to assist. Thank you and have a wonderful day.